So, Jeff, I think none of us really expect them to come out with a big announcement at Jackson Hole. They don't typically do that, but they have to be talking about this. And on the one hand, you have U.S. inflation really meeting and even exceeding that 2% goal, which would tend to indicate maybe they're on the right track to keep raising. On the other hand, there are some growing indications globally that growth may be coming down some. We had the Turkish EM thing last week. How do those two play out against one another?
Yeah, well, global growth seems to have peaked. We can see this in the global purchasing managers indices. We'll get the flash readings for August this week. But clearly that seems to be the case, both in earnings growth and economic growth. So it does suggest that central banks, at least the Fed, could probably take a slower pace here, maybe just a couple of rate hikes, maybe 2, 3. The market's expectation, rather than the Fed's expectation, the Fed's still looking at maybe 5 rate hikes, I think they're still forecasting before they end this cycle. So there's a very big gap between what the market thinks and what the Fed thinks. Maybe we get some clarity at Jackson Hole. Remember, it's not just, of course, Jerome Powell will be speaking on Friday, but all the world's central bankers. And we've got more central banks hiking rates relative to those cutting rates for the first time in about 12 years. So this is a global phenomenon, this shift towards tightening. And there's a question, if global economic momentum has already peaked, how much more tightening is there likely to be? Maybe less than central bankers believe.